Volatility is coming back into the market, and that could mean some very bad things. Okay, so as we get into this, we're going to talk about this and so much more as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward. Looking at AMC and GME as well. These expected moves, they mean a lot, and that's why we pay attention to them. Remember, this is what the options market gives us as far as data goes. And if you're looking for the best support, the best resistances, these are the lines you really want to be paying attention to every single week. So if you want to get these on your chart, we have already put them out on Patreon, and you can go in the link in your description and get over there to get these ranges for every stock that we cover on this channel, and that does include AMC and GME. So let's get into it. Looking at the SPY, first off, what do we notice? Well, the 2-hour crossed over, telling us there would be some kind of pullback right here, and that's what we're doing as of right now, starting to flag out. So if we're going to head lower, well, then we need to pay attention to those daily ranges. That's right. For the SPY, you can get daily ranges, and those ranges for tomorrow would be 547.79 to the upside and 541.23 to the downside. But I mainly want to pay attention to the weekly ranges being 552.95 to the upside and actually 536.07 to the downside, because you notice that these ranges got much bigger than last week. This is about a 1.5, range from the center here. So you have about a 3% range in here, which is much bigger than what we've gotten in a while now. So we'll pay attention to it. What does this mean overall? It means bigger swings. Implied volatility does not mean bullish or bearish. It just means bigger swings. So if you see a bullish signal when implied volatility is higher, you can see a bigger upward push. And if you see a sell-off signal, then you can see a bigger downward push. And that's why overall, when you see bigger ranges at these tops, you can start to think, hey, there might be some major downside coming. So we'll look for weakness in these areas. What do I want to pay attention to as far as that goes? Well, if the 2-hour wants to drop down, look for this to hold as some kind of base, that daily expected move, and maybe we get some kind of move upward towards that weekly expected move upside. The reason I'm talking about this is to create a scenario for myself, think into the future a little bit and be like, hey, how could I react based on this information here? Well, if we did something like this, what would form? Well, down here on the MACD, we would form some kind of divergence that gets us closer to that center line, meaning that we can reverse back around. We can reverse into a negative trend, and implied volatility is higher this week. So it is a time to pay attention. Let's go down into a 30-minute chart. As we notice, the 30-minute chart, if we're going to see upside, right? If we're going to see upside right away, we could on the 2-hour as well. I just want to give you guys some ideas. It really looks like, hey, we might break down to lower levels as far as this bar at the end of the day. So if we're going to break down to lower levels, I'm still looking for that 30-minute to cross up at any time and go positive, right? We have to go positive for positive territory. Positive territory, you see it's close to the center line. So if we wanted to curl up right away, well, I would be paying attention to this 547.79 to the upside. Now, if we head down right away, you'd pay attention to the downward move. There's something else that's very important to point out for the SPY at this moment, and that is 541.87. 541.87 is the top side expected move for the whole month of June, and that's why you need to pay attention, because we have a 68% chance to land down in this area by the end of the month, and the end of the month is coming very, very quickly. So pay attention this week. As we switch over to the Qs, just looking at a 30-minute, we want to pay attention to similar things, right? Can this go positive first thing, or are we going to see something a little bit more dramatic to the downside? We'll see, because if you want to see something dramatic to the downside or upside, you need to get outside of these ranges. Now, I know that when we get outside of these ranges, you have a 68% chance of a drop, but you also have the opportunity to use them as support to then head higher, right? We have a 32% chance to see something crazy up here, so make sure to get these levels on your chart. We have the weekly ranges at 489.47 for the Qs, and the downside range is 470.89 to the downside for the Qs. And then for tomorrow, we do have 483.41 to the upside and 476.95 to the downside. Now, if you've been here for a while, you know these things are very, very important. They are the best support and resistance you can look for throughout the week. If you head up to that level, usually the sellers are lurking right around here, and that makes sense because this is what the options market is expecting. This is overall going to give you an edge over a lot of traders out there, because no one really pays attention to this. At least not a lot of people pay attention to this, and we calculate the actual expected move. I don't just get this from some kind of platform. The platform most likely is not accurate. When you calculate the actual move, it is going to come up as different, so I encourage you to look up how to calculate it or take the course. The course this week, guys, is only $100. It's only, the end of the month is coming. You have 7 to 8 days to get that as of right now, so go down in that link in the description if you want to learn how to use these indicators for your trading, how to use these weekly ranges to set up a trading strategy. And I even give you a trading strategy for volatile markets, and volatility is coming back in. You can see by the big range here for the Qs, a little bit bigger than usual. So what do we want to pay attention to? Well, if the 30 minutes able to curl up, awesome. Okay, we curl up. We first need to pay attention to 483.41. If we're going to see some kind of bigger move up, okay, now we need to pay attention to 489.47 to the upside. Okay, we're going to pay attention to those things. If this goes positive, we should expect a positive move. Just make sure that's not short-lived and rolling over right away, because if we roll over right away, that could mean more downside as we keep rolling over in negative territory. We'll pay attention to that. As of right now, it looks like the 30-minute could roll up early on Monday. We'll see. I actually wanted to go into a 15-minute and just show you guys how we tried to base out here with some kind of double bottom divergence here. You see it down here on the MACD, you see it on the RSI at the same time. So upside would make sense, but then we give that away at the end of the day. So if we have more work to be done here, I'm looking for another point of divergence, maybe just a better point of divergence over here, a very clear one that maybe leads to some kind of bounce coming from the Qs down towards 476.95. That's what I'm really paying attention to for the Qs. As we pull up a 2-hour though, we have to say the 2 hours is still in pullback mode, right? So this is something to learn about the MACD. We discuss a lot of these things in the course, only $100 guys, and try to learn this stuff. It will really help you out. It'll teach you risk management, which is something very, very good. And it'll teach you how to manage your trade. And we tell you specifically how to manage your trade based on a 30-minute chart trade, based on a 2-hour trade, based on a daily trade. We're doing all of that stuff in the course. It is very, very useful information, and you can utilize it on any stock that you want to look at. So what do we notice here? As of this bar right here, this bar right here actually told you the Qs were going to pull back. Isn't that interesting? Way up here, the Qs said, hey, we're probably going to pull back here. And look at that. Hey, we start to pull back over time. Okay, so now we're pulling back. We're trying to base out. If there's more work to be done, we'll see. If there's a rigged move to be done, we'll see, because we'll see those divergences. We have a point to pay attention to for Monday. But if the 2-hour just wants to curl up right now, we could see that big move and then see some kind of divergence up here to the upside. And we'll be paying close attention to that. I think if they wanted to trick the market the most, they might send this thing down and then send it right back up. We go up towards that weekly expected move, and then we see that divergence pulling down this 2-hour close to the center line and then curling back up and getting a divergence that gets us really close to negative territory. As volatility scales up, we have to look for a potential reversal in trend for the Qs. As we switch over to the Apple is at that center line. Look at that. So Apple is one that we talked about. We talked about this divergence up here, this possible double top happening. I believe we posted this even to Patreon early on Monday, because this was outside of a weekly expected move. You don't think they're useful? This was where that weekly expected move was for Apple, and you could have those on your charts. Down in the description is where you can get that. It's only $7 a month. It's a cup of coffee a month, and you can get these ranges, get better at trading. This is the best support and resistance you will have. And at this moment, we said, hey, there looks like some kind of divergence. We got the rejection divergence here from the 2-hour, and we see that curl down. So right around this area, actually right here, we said, hey, there's no reason for upside. Yeah, we pop up on a smaller time frame, but that never crosses up again for more positivity. Notice it never crosses up again for more positivity. You're up here in higher levels, so a pullback makes sense. As of right now, you would say that's a pullback because we're still in positive territory. So if that wants to turn around at any time, we could see another positive move because we're still in positive territory. Now, if that starts to go negative, we can say, hey, this might get a little uglier. Maybe we want to pay attention to the downward expected move for Apple. So as I pull up a 30-minute, I just wanted to point this out as I pull up a 30-minute here. In the end of the day, we actually were creating some kind of divergence here if you just flip around right now. So if this 30-minute wants to and just flip right around on Monday, we could see a move upward, and we'll pay attention to that because a 30-minute little divergence like this can turn around those 2-hour charts, and maybe we actually want to head higher, create another point of divergence on a 2-hour for Apple. I'd be paying close attention to this. As of right now, though, you have to talk negatively about Apple. Why do we have to talk negatively? Because the MACD is in negative territory. It is below the center line, which means it is in a negative trend on the 30-minute, which tells me as it crosses over, hey, be careful, because the MACD itself is telling you downside is the most probable move as of right now, but that can change very quickly. So I want you to be aware if that turns right back around. Well, if this starts to go positive, we then have to talk positively about Apple. So get those ranges on your chart. As we look into Tesla, this one's a little different than Apple, isn't it? It's a little bit different. Why is it different? It never crossed over again. So we can start to say, hey, this on the 30-minute could go positive for another positive move. Now, we were saying, hey, if this breaks down, look for a retest. This looks like almost a retest of a breakout area. So very, very good retest there. But you notice we're starting to scoop back up. If you can even see in here a little like left head and right shoulder. So we talk about patterns in the course as well. And as you can see, the 30-minute is trying to go positive. If that goes positive, the price action is going to be positive. That's really, really simple. Try to make this stuff a little bit simpler for yourself by taking that course. And the 2 hour here, what do we notice about it? Well, it told us pullback. Where did it tell us pullback? It was right here on this bar. It said pullback, no reason for upside. And now you're seeing, can that momentum shift back up? Can the momentum shift back up? So we'll see if there's like a 30-minute divergence here that really gives us a stronger base for this 2 hour to roll up. 30-minute divergences like to roll up 2 hours. That's why I look for them. And right now it's saying pullback, but it's in positive territory. So if that wants to get towards the center line, curl up at any time, we can see some positivity there. And a lot of people would say, oh, so there's a way up and a way down. Yes, a stock can go up, a stock can go down at any moment. And you just want to pay attention to momentum. That is what we are doing on this channel. It really helps us out. And having something like weekly ranges every single week will really help you out with every stock that we cover on this channel. So as we look into Amazon, this is something that we were talking about. We said Amazon looks like it could turn up again into positive territory. We said that right around this level. Why did we say that? Well, we had a 30-minute divergence. We had the double bottom, and that ended up curling up right here, which meant more positivity. Okay, so as of right now, we want to look out for a divergence here, because if this rolls over, look how it's making the divergence, but it's not rolled over yet. You got to be patient to see that roll over, and then it can go negative, starting some kind of negative trend. We'll see if that is going to happen, right? We have to be patient and wait for our signals, but let's show you guys that 30-minute signal that we pointed out. And what do we notice right here? We had the divergence for this little pop. You see the little divergence right here on the MACD, and the RSI a little bit wonky, a little bit flat for the RSI. So we would treat that as some kind of bounce, not necessarily a full recovery, and you're far away from the center line. But this divergence right here, so you have divergence at the low, and then you have divergence across the way for this double bottom. That look right there is very, very close to what? Positive territory. So you notice that curls up right here, and right here said contrarian bullish signal. That's this right here, this little bar said contrarian bullish signal, and that says, hey, the 2 hour can roll around. We can see 2 hour momentum take over, and it did, and now we're seeing those upside moves. As of right now, maybe even a small 30-minute divergence. So if that rolls over, we could see Amazon suffer early on in the week. Now we'll pay attention to it. Nothing is confirmed yet, so this could just be still a positive move up, and we want to pay attention to that. But I just wanted to show you, these are the type of setups that we are looking for on this channel. These are what we will be posting to Patreon. And on Patreon, I give you a weekly update every single week. We pull those weekly ranges up. We see if any trade setups are happening, because you want these trade setups early on in the week so you have a lot of time to close below those ranges if you get outside of them by Friday. Nvidia, what do we notice here? Well, it started to break down. Now, what do you notice about the 30-minute? Well, one, it's very negative here. It's still negative, so it's going to take a lot of work to go positive as of right now. So what if we actually pop up, curl back down, right? There could be a ton of things that happen. You just want to follow this momentum indicator. Usually I like some kind of divergence to see us basing out, kind of like we just showed you on Amazon. So the 30-minute is curling up, but it's in negative territory, and you got to think about that. So we have to talk negatively about it, but we can see some kind of bounce if that wants to curl over. 2 hour, what did we say about the 2 hour? Everyone asking me this, everyone asking all the time, and I said it on the 30-minute when I was live. That's right, we go live every single morning, so join us live. Make sure to like the video and subscribe. But what do we notice here? This bar right here said no reason for upside. There is no your momentum was saying I am going to pull back. That is what it is saying right here, because you're positive territory and you're curling down. So that is saying pull back, and you do have a lot of divergences. So this is the trade setup that I actually took. I'm not posting Nvidia trade setups because I think it is a very rigged to the upside stock, so it is very, very difficult to short. I told you guys how I played it. I did it on a 30-minute, played it down to here, took all of the money that I had invested out of it and left the runners, left the money that way I can just play with house money. Drops the next day. I said, hey, I'm paying attention to 125. We hit 125. I take my profit in this area, and boom, everything looks good. So what do I want to notice about the 2 hour? Well, if the 2 hour curls up, well, what can happen? Positive territory, positive move can start to happen here for Nvidia. So pay attention. And the only thing I would say about this 2 hour push that could come from Nvidia is, one, it has a 15-minute that had a rejection divergence below it. So pay attention to that. You could be getting a double bottom 15-minute rejection divergence. So that is something to pay attention to, right towards the level where I said, hey, pay attention to 125. That looks like the level that looks really, really good at this point. And boom, it goes right to 125. Now, the weekly expected move was just a little bit below this. That's why I chose 125, because I said, hey, this is lining up to the last point where we kind of broke out from, kind of lining up towards this gap fill. So I just made it a little bit higher for myself. And look at that. So you see the rejection divergence, meaning we weren't able to confirm more downside here. And you see that on the RSI at the same time. So this can really rotate up the 30-minute. And since you have a strong base on a 15-minute, you see how this 30-minute can actually just turn up and go positive right now. So pay attention to Nvidia. If we're going to see something more dramatic, then this will not cross over early on in the day, or it will cross up and cross right back down, right? It'll cross right back down into negative territory if we are going to continue a negative trend. So just be weary out there, right? Be patient and make sure to trade like water. That's what we do on this channel. We have lots of rocks in our stream, and a lot of that can be price movement right now. One of the rocks in your stream is just they're not allowing a lot of the data to hit the tape. We had some of the most dark pool trading going on Friday that we've ever seen in the entire market. So watch out and trade like water. It's some of my best advice going on into this week, as volatility is going to be a little bit higher, and they may actually let the numbers hit the tape this week. So AMD, we just want to see here. Remember, we were talking about a positive move down here. We were talking about, I was like, you know, AMD, it's creating a bunch of weird divergences down here on the 30-minute, and I believe the hourly and the 2-hour have them as well. And we just said, hey, watch out, because a big move can come. Oh, big move came. So we were talking about this. And first of all, let's talk about the 30 minutes. So if you want to see more positivity, you got to cross up positive territory. Right now, it's still saying pullback. But if that can confirm, go past this trend line right here, most likely you are seeing that cross up, and you can see a big move. And that's where it's very good to use the weekly ranges as a profit-taking tool. And you can see AMD make a big move like this. And guess what? Maybe your weekly range is right here, and you know, hey, the options market has only priced this in. So why am I going to price in a bigger move if the options market is only pricing in that big of a move? The market maker is in control of the market. So this piece of data, the weekly ranges, is a piece of data that gives you a serious edge. Okay, so 30-minute crosses up, positivity can be there. If that starts to go negative, well, we could see more downside. So we'll think about that for a second. But the 2-hour, what do you notice about it? So it's pretty much 30-minute curls up, positivity, 2-hour curls down. Well, we could test this low. We could go make a new one. Why do I say that? Because it is right by the center line. Now, I'm talking positively overall about the 2-hour because it is positive in positive territory, and that is something to pay attention to, as we may see that 30-minute curl back up. But if that is short-lived, we see a 30-minute divergence that rolls back over. Negative territory is right there. I just want you to be on your toes for anything that can happen in this market as they're rigging things up and down. Okay, as we look into Meta, this is what you want to see, guys. This is overall what you want to see from a stock. If you miss out on a big move, you see that pull down. Now we see a 2-hour. If that thing curls up, that's a key thing. If it curls up, when it curls up, then you want to react and say, hey, this says more upside because it says positive territory, which means what can we do? Well, we can test all these highs, but mainly I think we're going to test this level right here or head a little bit higher. Okay, so this level of about 500, and we'll say 510, or go make a new high, and you have that weekly range. That's why it is so useful to you. As we look at a 30-minute, why could I be saying that there could be some positivity down here? Well, on the RSI, I do have that divergence. Okay, so if I have one of them at the same, one of them and not both at the same time, this is something we talk about in the course a lot. So we're going to do it quickly here. We see the downward price action. We see the downward move for the MACD here, but the RSI is slightly up. Okay, so the RSI is slightly up here, which tells me there could be some kind of bounce, but watch for that to be short-lived, as that could curl right back down and make a stronger base. What if that stronger base needs to be formed? Some kind of double bottom, some kind of lower low here that creates some kind of momentum divergence, telling you momentum is dying out, and then we see an upward move after that. I want you to be aware of that. Usually, a lot of the time, you need divergences in order to curl up 2-hour charts for a 30-minute here. You need those divergences to curl up a 2-hour chart, but that doesn't mean you have to have them. If this wants to, it could just curl up right now. You see that 2-hour curl up, and you know, hey, that curled up base, how, okay, we can start going into a positive trend once we cross the center line for Meta. Let's get over into AMC. Now, AMC, I do want to update these levels here for you. Okay, I'm giving the upside move for AMC and GME. The interesting thing about AMC and GME is they have less implied volatility than I've seen in a while. AMC usually has less implied volatility. It's still over 100%, by the way. Both of them are still over 100% implied volatility, which is very high. You very rarely see that. I've never seen that until I started to look at AMC and GME. So big moves are supposed to be happening in the market, but you notice this, the market maker is in complete control of this. And on Friday, they actually only let mostly selling hit the tape, and all of this price action actually was not the real price action because most of this was happening in dark pools. I believe it was 65 to 85% of the trades were going into dark pools, which tells you they're just not letting the buying hit the tape is overall what I think about here. Now, for the upside, last week it was, hey, get above 599. This is what the options market priced in last week, and that means you need to get above that to see something crazy if you're looking for upside here. And you have to be aware of this, there is a downward range as well. So I'm going to update those right now for you. AMC to the upside, if you want to see a crazy move, you got to get above 536. Now notice it is smaller this week, so that means maybe the short sellers are running out of steam. We could see something crazy because this is getting closer, and all you have to do is get above something expected to see something unexpected, to see a 32% chance of something crazy. But remember, if you get outside of that range early on in the week, you have a 68% chance to land back down in this area by close on Friday. So pay attention to that. What do we notice from AMC right now? Well, it got rid of all these divergences. You're just seeing this curl really far over. But have we really lost 437? We haven't. Okay, 437 was my overall support that I found. Now, I do have a better support, which would be that downward weekly expected move. You can get that over on Patreon, but it's pretty much if we head down to there, you could see a bounce, or if you head below that, you're going to see something crazy to the downside, or we're going to see that to the upside. So we'll pay attention to AMC. As of right now, the most important thing you want for AMC is just to curl up the 2 hour. It's still within range of going positive, but you have to talk negatively about AMC right now because it is the 2 hour said pullback originally, right? Right here it says pullback. Right on this bar, it said, hey, no reason for upside, and we never curled back up. So if you're sitting there going, I'm getting beat up by this because I keep buying a call right here and right here and right here and right here, well, this never curled up. If the 2 hour is going to curl up, then you have a reason to take a trade. It's something we talk about in the course, reasons to take a trade, and I give you all of my reasons that I look for to take a trade. And as of right now, do I have a reason for AMC to go up? No, I do not. Now, I'm still holding the stock. I'm not in any way because I think they're going to make it look bad when then something big might just happen. So I'm going to always be pretty much taking one of my trades per month and using that to pay for calls for AMC and GME. So I'm just using house money to pay for this. I have no risk whatsoever as far as it goes for my calls now, and I'm just holding the stock. So very, very important to know there, but you need the 2 hour momentum to be with you to see something crazy. And then also the daily is still saying pullback as of right now. It's in positive territory, so it is not dead yet. It is dead once we actually go negative, then you can start to say it's dead. But right now, it's not dead. It's just saying I'm still in a pullback. If I base out at any time, if that 2 hour starts to curl up, hey, the daily could curl up as well. And we will be paying attention to that on this channel. GME, same thing, right? The daily is saying pullback as of right now. And if that curls up at any time, hey, we can see that positivity. You notice we started to violate this triangle here, and I'm going to update that topside move for you, but this was where you needed to see some craziness. Now, it said to some extreme volatility. I think it was over 200% for GME last week, and that is something crazy. You just never really see that. So something fishy is going on here, because if you see an implied volatility of 200%, you better be seeing big swings, right? We better be seeing big swings. But what do we get? Well, for GME, you would say, yeah, I guess this is kind of a big swing, but it's really not. This isn't really big. Like if you're getting 200%, you should be seeing things like this. You really should. And they're not allowing that price action to hit the tape here. They're not allowing it to go to the lit market. They are all going to dark pools. That's why the volume looks like crap. And at the end of the day, some volume came in, but we'll talk about that maybe tomorrow when we're live and see what the volume looks like tomorrow. So what do we notice from the 2 hour? It never curled back up. Right here on this bar, it said, hey, no no reason for upside. We went sideways, now we head down. So if you were looking for, hey, yeah, I'm gonna get calls down here towards $24 and that thing's gonna go up by Friday, this is why I do not encourage using short-term expiration, 0 DTE. I am someone who is a position trader. I know that this market is rigged, so I know that there will be times I need to scale in. I know there will be times where I need to manage my risk. I am not going to put all of my eggs in one basket for a few hours of the week, right? I'm not going to do that. I know that they're going to try to trick me a bunch, so I don't do that. I think you can make plenty of money, even just not even doing options, especially with something like GME, if the problem comes to light. What do we need to happen? The 2-hour has to curl up and go positive. It's a little further away as of right now than AMC, and it has a smaller implied volatility. So this was the level you wanted to get past last week in order to see something crazy. So let's get you that new level right now for this week, which is a little bit smaller. Okay, 27.79, not too big, okay, not too big. So this is all you need to see something crazy. This here is where buying can get more buying, which would be a gamma squeeze can start to happen if you hold above these levels here. As of right now, you know that short sellers are in some pain because we're above the price point of 20. So they are experiencing pain every single week and they're reapplying new positions, and maybe they're running out of money because this implied volatility is not very high. We'll pay attention to that, but as far as the signals go, you need this 2-hour to curl up and go positive. Is the 30-minute even positive as of right now, though? No, it is not. You're creating a point of divergence as of the end of the day on Friday. We'll see if that can curl up early on Monday. We'll see if the squeeze is happening. Maybe on Monday, if we're able to get above this key level of 27.79, you have a chance for that happening, and you do have divergences down here. So if this 30-minute curls up, it's telling you momentum's dead. If that curls up, you might have the moment if they allow it to hit the tape. That's something very important to understand, if they allow it to hit the tape, all right? Now, we did have some of the biggest insider selling for Nvidia we have ever seen, I think, in history for a stock, or a tech stock. So we have some of the biggest Nvidia, and I actually have a picture of it. I'll show it live tomorrow morning. I'll have a picture of the insider selling that is going on for Nvidia, and this is a huge breakout, and this is a big warning signal right here. We broke above our level of 105.65. So if we remain up here, if we don't give that away right away, then that could mean some very bad things, because the dollar has been going up while the stock market is going up. So pay attention. It is a time to really pay attention to the dollar here, because we could be seeing this keep going positive, and you notice that this is just going up and up and up while the stock market keeps hitting new highs. And we warned you about that going into Friday, and what do we see from Nvidia? A drop, okay? So pay attention. There's insider selling, and we're going to show you that for Nvidia tomorrow morning. One thing to pay attention to as well for the volatility is you closed above the I think this is a 9-day moving average. Actually, let me double check real quick. But there we go. Okay, so this is a 9-day moving average as of right now. Sometimes I switch it between a 5 and a 9, so I got to make sure. But you're above a 9 and you're above a 20, and that is something to really pay attention to. If you want to see a crash, you got to start to close above this 200. You got to get the 50 to cross above that 200. Those are overall crash signals when you look at the VIX. One thing to really pay attention to, though, is the weekly this week. I think the weekly this week going on into the next few weeks is going to be where we really want to pay attention to volatility. I said about, was it about 25, I think it was about 27 days ago, 26 days ago, that we're most likely going to see a major top in the next 30 days. And we're starting to come into this last week. So this week, I am expecting some volatility and see some kind of top that leads to a bigger pullback or some kind of start of maybe a bear market. Now I'm starting to think, what if they pop this weekly up and then we see a few weeks of positivity and then that scales up one more time going into that election. So we'll pay attention to that in September. But the reason you really want to pay attention to volatility over the next few weeks, especially in this month, is because, one, we made that scenario. We talked about this scenario before this happened. We said, watch out, a higher low looks like a very good signal to pay attention to here. If the SPY goes higher, the SPY went higher, so volatility should be down here. It's holding up better, which means we're closer to getting to 20. Crazy things happen above 20. The reason you got to pay attention to volatility is because we have a triple divergence down here on a weekly scale. We have the dollar that is showing you the insider selling, and this means if this this goes positive, we could have volatility remain in this market for weeks and weeks and weeks. So pay very close attention and trade like water. Thank you guys so much for watching. The main takeaway here is just be on your toes. We're going to see a few bigger swings according to the implied volatility if they let the numbers actually hit the tape. So if you need those ranges, make sure to click down in the link in the description to get those for every stock that we cover on this channel. And then also, if you want to learn this type of stuff, if you really want to learn how to utilize all these indicators, if you want to learn how to utilize the weekly ranges and find those divergences, learn about divergence, learn about how to manage your trade, because this market is rigged. You have to know how to manage your trade. It's very important. It can rip you up. That course is only $100 until the end of June, and we're coming into the end of June, so I highly encourage you to go get it. The link is down there in the description. Thank you guys so much for watching. I really do appreciate it. You guys have been fantastic coming to the live videos, liking, subscribing. Everyone out there is talking very highly about the course still and making sure to manage that risk, and I really respect anyone who dedicates any time to learning, because if you dedicate yourself to learning, a lot of people just don't do that when they start trading. A lot of people just try to watch a bunch of, and you can watch these videos, it will just take you a long time to really piece together all of the pieces. When you get the course, it just tells you specifically this is what you need to look for, and that makes it a lot easier. If you see volatility go up, you're going to start to do really, really well if you take that course. So thank you so much for watching. I really appreciate it. I hope you guys have all the luck in the world trading this week, and I'm out of here. Peace.